Welcome to another Blackprint video, and the purpose of this video is to introduce you to a very important aspect of what we're going to be doing. This the concept is candlesticks, and it's everything that you see on the screen with the green and the white long bars that you see. Those are candlesticks. Some of you all may be familiar, some not, but I'm going to go through this entire thing to kind of share with you what these mean. And right now, what we're looking at is the Euro US dollar currency pair, and we're looking at a 1 hour time frame. So each one of these represents 1 hour. So that's a lot of hours that have gone by. So you can see down here at the bottom, October 16th to now October 23rd. But these are the candlesticks, and really the Japanese really began using technical analysis to trade rice in the 17th century. And pretty much kind of the concept is that the why or the what is more important than the why, and the what meaning price action. So this is the price. This is the actual what is actually happened versus why it actually happened, like some news came out, or a new economic report came out. It's also kind of understood that all the known information is reflected in the price, and the only way to know what the price is to look at the candlesticks and tell. And the market is really made up of buyers and sellers that move the market based on kind of expectations and emotions. And those emotions really are just fear and greed. That's why markets move. And with that being said, markets obviously definitely are going to fluctuate, and the price may or may not reflect the underlying value. So the only objective information that you have at one time is the actual price. And that's what we're going to talk about today with these candlesticks. First off, there's a concept. When you talk about candlesticks, there's a concept where you have bullish and bearish. And bullish, think about a bull. A bull charges ahead, a bear hibernates. So bullish really means the price is going to be going up, and bearish means the price is going to be going down. And you'll hear a lot of the terminology will be about going long, which is buying, and then going short, which is selling. And most people are not really familiar with the concept of making money when something is dropping in price. But that's a reality for us. That's a reality that we live in. So the first thing I'm going to do is talk about a bullish candlestick. What a bullish candlestick looks like. This is a bullish candlestick. Basically, it's black on the inside, and this is a bearish candlestick. It's hollow. It's white, right? So it's all white. So bullish and bearish. That's the two, right? So you can easily tell what kind of candlestick you have. And you look at this long candlestick, you can tell that, hey, that's the market was really dropping at this point. But there's also other aspects of the candlesticks. It's when it opened, when it closed, beyond bearish and bullish. So let's talk about that a little bit. I'm gonna blow this up to really nail this concept home. Let's see here. Let's find a good one. All right, let's look at this one. This is the candle that we're gonna talk about. So each one of these represents an hour. That's an hour worth of price action. But there's a lot of information within this. Fortunately for us, as we begin to trade, you won't have to pay as much of attention to it. But I want to make sure I give you the proper education as to behind why and how and what it is. So each candle opens at the top of an hour. So whatever hour this was, let's see if it'll pop up. Well, it's down here at the bottom. Let's see here. This was 12 o'clock that time. So this is when it opened at 12 o'clock. This is the open of this candle. The bottom is always the open. Well, not necessarily. This is the open. And how we can tell that this is the open is because it's a bearish candlestick. So the price, it's a bullish candlestick, I'm sorry. If it were a bearish candlestick, then the price would be below that, right? Or this candle would be below this and it would be white. But because it's a bullish, we can tell that it opened here and it closed here. So anytime you have a bullish candle, the open is going to be below the close. So the close is here, the open is here, and this little area right here, this line, vertical line, and this vertical line is referred to as the wick of the candle. And don't let that scare you. What is essentially what that means is has the wick represents the entire movement, the entire price action of what that candle did in the hour. So from 12 o'clock to 1 o'clock, this candle went from this open down here to this low, that was the lowest point, all the way up here to the highest point, and actually closed here, right? That's all that means. So that's a bullish candle. Now let's look at a bearish candle and talk about the same thing. So this is a bearish candle, and here is where the bearish candle opened, right? And in that hour, let's see what hour that was, 15 o'clock. So it's army time. So the market opened here, came all the way down here, came all the way up here, and it ended up closing here. So you open, actually the price is popping up there. So the open was 1137.30. The high was 1137.54. The low was 1135.50. Uh-oh. See if we can get that back up there. 35.59. And the close was 1136.39. So let's look at just really the open is 1137.30. And the close is 1136.39. So that right there should tell you, okay, the open is going to be on a bearish candlestick. The open is going to be lower. I mean, the close is going to be lower than the open. So open here, close here. Bullish, it opened here and closed up here. So that it really is the concept of the candlesticks of what they're looking, what they look like. And so you'll hear me say, take this magnifying glass out a little bit. You'll hear me say, okay, we're looking for a bullish candlestick on this, or we're looking for a bearish candlestick on this, and that's all that means. And with that information, think about it. We're just looking for a black candlestick, or we're looking for a white candlestick. That's really what it comes down to. But I did want to give you the education behind what it means, where it came from, and how effective it's been over time. Is that usually when you get those type of candlesticks, the price action generally continues to follow. So that is the history of the candlesticks. And next up, we're going to be talking about bringing all of that information together with moving averages and SAR dots and orders, et cetera, et cetera, et cetera. I hope that's helpful. If you all have any questions, please feel free to reach out. And I'm looking forward to the next video. Talk to you soon.